Swiss family businesses contribute 64% of the country's GDP and account for 2/3 of jobs in Switzerland. They are responsible for both family and business matters and have to maintain a balance between them. We at PwC give Swiss family businesses a voice.
My name is Mercedes Grau and I'm working in the business development team at PwC Switzerland with a strong focus on family businesses as well as the family office segment. We covered several topics and family offices during our previous podcast episodes, but also today we will partly come back to the term family office whilst actually talking around a topic that some people considered more and others considered less over the last year. It's about the tax reform, which became effective beginning of 2020. So together with Jörg Niederbacher, we will discuss the impacts of the tax reform on family office structures and wealthy individuals here in Switzerland. And Jörg Niederbacher is a partner at PwC Switzerland and leads the private client service and family office segment. He advises family businesses and the owners in tax-related matters since many years, especially when it gets to the point of implementing and optimizing family office structures. I'm looking forward to another interesting conversation with you, Jörg.
Thanks, Mercedes.
As I mentioned in the introduction, we would like to talk about the tax reform, which became effective in beginning 2020. And I'm actually not an expert in the tax reform, but you are, Jörg. So I would kindly ask you to just give a short overview of what the tax reform actually covers and means for family office structure, but also for SMEs and family businesses.
Yeah, happy to do so. I mean, we have mainly two areas in this tax reform. One which affects directly the ultimate beneficial owners. That's kind of the dividend taxation that has been adjusted. So it's getting a bit more expensive to distribute dividends. And then all the other stuff, which is the bulk part, affects the corporations. There, on the one hand, if we have a focus on family offices, the kind of the holding structures in Switzerland, mainly in terms of capital tax and then also tax to be paid on interest and potentially royalty income. And then you have kind of the part that affects the operational Swiss entities or Swiss subsidiaries, which is mainly the patent box and the research and development super deduction, which are kind of nice things where a lot of Swiss, also mid-size entities can benefit a lot.
And I mean, there were some points that companies or family offices should have covered also already in 2019. So what options do we still have left now in 2020 to adapt certain structures, but also be COLIC compliant or be more in line with the new tax reform?
Yeah, the good message is it's definitely not too late. I mean, it's only with regard to dividend taxation there. I mean, in 2019, there were different rules than in 2020. So who did not distribute dividends in 2019? I mean, that window is closed. And there it's more about kind of checking for the respective canton how they kind of change their dividend taxation, whether it could still make sense to do something in 20 rather than in the subsequent years. And on the corporate side, there it's definitely not too late. I mean, the reform became enacted 1st of January 2020, which means most of or all of the changes affect 20, and the latest point when things have to be done is the tax return 2020, which is filed in let's say summer 2021. But what people should not forget is that they really have to take active actions now to make sure they can really benefit from it. So if you, for example, take the holding companies and what's important to them, then if family offices would have holding companies with interest and royalty income, then they should now really think about how they can benefit from the transition rules to get a step up, and by doing so ensure that they can simplify, keep the current tax rate for another 5 to 10 years. So that's something where really people have to take actions now. And the other area is then more on the operational side. So if we have family offices who own Swiss businesses, then they should now really check whether the patent box or the R&D super deduction could bring them a benefit. And what we see on that side is really that people still often do not yet see the opportunities that come with the tax reform. They think, well, this reform was done for kind of international multinationals, whereas in practice we see that it's often the case that mid-sized businesses with a good profitability benefit in a very nice way, because in the past they just paid ordinary tax, and now they can benefit from what has been implemented to kind of help the ones who actually lost the benefits. And therefore it's really kind of a win situation where, for example, in Zurich, if you're a very profitable entity, I mean, you might reduce your tax rate from around 20% to something like 12, 13, 14%, which really might come with a very nice savings also in terms of absolute numbers.
So great to hear that it's not too late to act. You mentioned several things now, but can you clarify a bit what kind of options you have with the patent box to save actually taxes?
Yeah, happy to do so. I mean, the patent box actually allows or leads to a lower taxation for businesses or businesses which lead to an above average profitability, and this kind of above average profitability is then benefiting from a preferential taxation. The driver behind is clear, that Switzerland wants to support kind of innovative companies and kind of intellectual property based products. And therefore, if you're in a business where you have let's say a good profitability starting with double digit and where you have intellectual property, then it's really the right time to at least check whether the patent box could be something you can benefit from. Because at the end of the day, you don't have to check things. I mean, you just have to file it with your tax return. I mean, it's not that straightforward, so it needs a bit of time and effort to kind of get it done the first time, because you kind of need a bridge from your, let's say, statutory profit to the profit that finally benefits from this preferential taxation. But once done, I mean, you can use it for the subsequent years, and it's definitely worthwhile doing it. And we see kind of paybacks of such projects of a few months, which shows that it's not a big effort compared to the savings you can achieve.
So it means now it's autumn 2020. You still have enough time until end of 2020 to apply for the patent box.
Yeah, you even have a bit more time. I mean,
okay.
you need to file it with your tax return 20, which is due in 21. So it's now a good time to start thinking about, do I have, or what kind of products or products group have the right profitability?
Yeah.
Where do I have intellectual property, or should I still register additional intellectual property to benefit from the patent box? And then the biggest effort is always in kind of number crunching to get from this statutory profit to kind of the relevant tax profit that benefits from the regime. But yeah, I mean, there is still enough time, but I would definitely propose to clients who have such kind of companies that they should start doing it. Because what is clear with the tax reform, that it's really something where taxpayers have to act proactively. So the tax authorities will definitely not approach you and say, well, look, this you should or you could do on top. But it's really the ones who kind of think more about it and take better care of it, they will benefit more out of it.
Thank you for clarifying on that one. I mean, coming back to the beginning of our conversation, it was more about holding structures, family offices, and so on. So what can you just conclude what options are still out there to adapt to the new tax reform until end of this year?
I mean, for the family offices, of course, in a worst case, if you would see that you have kind of holding structures in cantons where the capital tax increases substantially, where this would hit you hard, I mean, yeah, then you can still think about moving companies. I mean, you will still be liable for part of the year, but but it's definitely something one can consider. But that, of course, then also means that you have to shift people around. So it's not an easy one and just kind of shifting a box from, for example, Zurich to Zug, but you also then have to be there, kind of walk the talk. Therefore, this is not what I would expect. I mean, what we see more in practice is that family office just rethink their structure, sometimes also kind of merge entities together to avoid kind of duplication, for example, of this capital tax. And make sure they benefit from all the grandfathering rules that help to kind of keep the tax rate on, let's say, interest and royalty income on a reasonable level. And now we see definitely more demand in kind of having a look on the operational ends.
Thank you for that, and especially clarifying on a topic that is more or less discussed, but shifted on to the lower part of the priority list. And I think what our listeners heard now, that there is still time to proactively act on the tax reform, and also maybe reach out to experts who can help them on sorting out the best solution for them. So I guess you and your team will also be happy to help, Jörg, and I thank you for this interesting conversation.
Thanks. We're, of course, very happy to help and to clients who think this could be something for them. Thanks a lot.